Singapore's employment growth slowed in the first quarter of this year. That's according to the Manpower Ministry's latest labour report. Unemployment also ticking up slightly. Still, analysts say that that's not a cause for concern. Nicolas explains.
The central business district got a little busier in the last 3 months. The financial services sector, along with healthcare and education, helped prop up employment growth to 4,900. While that's nearly half the number of new jobs added in the last quarter of 2023, experts aren't worried.
So most companies will rush to kind of put positions already in place by the end of quarter 4, and that's when you'll see a hike of employment. But in quarter 1, it will be a slow start, always to allow some leeway before Chinese New Year and thereafter before people start, or to actually even look at vacancies.
Fewer non-residents were employed, especially in the construction sector, as the number of work permit holders allowed was reduced. Unemployment also rose slightly, from 2% in February to 2.1% in March. Market watchers say this is only temporary, as more people switched jobs.
A large proportion of PMETs that we end up recruiting within, we see moving from one organization to another as the major reason of switching jobs. It's the percentage of growth opportunities in comparison to what we do on switching companies is relatively low.
The bad news is that wage growth could slow. Only about 26% of employers now intend to raise salaries, down from over 32% polled last year. It's another sign that the need to upskill and keep relevant has become even more pressing.
It's more important to understand that you have to be able to articulate the value you bring, and therefore what they're looking for is the learning mindset of employees, and employees who are willing to invest in their own growth.
Assistant Secretary General of the National Trades Union Congress, Patrick Tay, says it's become more imperative for workers to ride the wave of changes by upskilling. To that end, the labour movement says in its May Day message that its priority is to improve access to skill development courses and to help workers adapt to new job opportunities. 200,000 workers have already benefited from its training programs, with many receiving wage increases.
Retrenchments here in Singapore fell for the second straight quarter. 3,000 people were laid off from January to March this year. That is down from over 3,400 cut in the last quarter of 2023. And the Manpower Ministry says that retrenchments rose slightly in sectors like metals manufacturing and professional and IT services, and that business restructuring, well, that remains the top reason for companies axing staff. This comes amidst recent cases of layoffs by companies from various sectors. Logistics company Ninja Van Group, for instance, sacked about 10% of its regional tech team today amid a cost-cutting exercise. Affected employees will get 1 month of severance pay per full year of employment, as well as job placement support. Meantime, search engine Yahoo Singapore also fired 17 staff from its editorial and social media team. CNA understands that this follows a shift in editorial strategy to move away from original content and focus on curated work from newsrooms like Reuters and The Edge Singapore instead. The company says that it's given affected employees a severance package above statutory requirements. A program is also in place to help them find new jobs. A task force on responsible retrenchment is monitoring the case. It comprises representatives from the Manpower Ministry, Labour Movement, Workforce Singapore, as well as the Employment and Employability Institute. NTUC and WSG will also extend support to those affected workers. They will get career advisory and employment facilitation services as well. And meantime, the Labour Movement says that it's dismayed by the retrenchment exercises from Yahoo and Ninja Van. In a statement, it says that both companies are not unionised, adding that they should be considerate about the timing of retrenchment exercises, given that they occurred in the lead-up to May Day. Now, NTUC says that its affiliated unions will reach out to members and provide support for workers who may be affected. Analysts say that such downsizing trends are to continue, though at a slower rate. Now, that's as most companies are at the tail end of their restructuring processes. They add that job opportunities will still open up, even as firms now take longer to fill these roles.
There's roughly 20% more time taken to complete a process of recruitment. So decision making is slower, but the number of jobs that we are getting from our clients is higher quarter on quarter. So ultimately, it will result in employment. That's the fact that it won't happen in a time scale that we were used to.
Okay,
so it is a bit of a patience game.
Now, over half of the companies polled by the Manpower Ministry say that they intend to hire in the next 3 months. Meantime, business outlook for manufacturing and services firms have become more upbeat for the next 6 months. The electronics cluster is the most optimistic, citing increasing demand for consumer electronics and storage chips that are needed for artificial intelligence servers. 86% of manufacturers expect to maintain their employment levels in the first quarter, while transport engineering and chemicals firms plan to hire more.
So what we are seeing now in the transportation logistics sector really is about moving people, moving goods, which is starting to come back, and the demand for just engineering services becomes very, very strong. Therefore, the hiring side becomes very strong as well.
On the services side, the accommodation sector is the most optimistic. Hotels expect occupancy rates to improve, along with a rise in travellers. But those in retail, trade and F&B, well, they don't expect a pickup in business in the next 6 months, with fewer festive events coming up. Still, analysts are bullish about the sector.
With the Singapore Grand Prix coming up in September and upcoming events, that should bode well for the accommodation sector as a whole, including hotels, and that could possibly have some spillover impact on food and beverage services over the coming months. So perhaps this over-pessimism isn't really warranted.